Welcome to our latest Between the Lines Live. I'm here in Perth, so a great time to visit Western Australia and see what the market's telling us over here. My name's Vanessa Rader, I'm the Head of Research at Ray White, and today I'm joined by my colleagues here from RWC in Western Australia. We've got Stephen Harrison. Stephen is the Joint Managing Director.
Hello.
Welcome, Stephen. And we've got Brett Wilkins. We've had Brett on before. Brett's the Director of Capital Markets here in WA, so welcome.
Hello.
I think there's so much to unpack. WA has obviously been a market over a number of years now that has really outperformed when it comes to kind of the GSP, the economy when it comes to Australia.
Yeah.
The residential market booming at the moment, but we're here to talk about commercial a little bit more. So let's start off with some of the indicators. So population growth, super strong. People are coming here from the East Coast. People are coming here from overseas. That migration piece, interstate migration, is still happening here.
Don't forget people having babies.
People are having babies here more than they are in actually other states. That's quite an interesting statistic. And like I said, the fundamentals of unemployment are really strong. Your economic performance is really strong as a state. So what does that mean for commercial property markets? So I might start with you, Brett. Let's start high end of town. So office market. A lot of people talking about office in the other parts of the country doing a little bit poorly. Your vacancy here is 14.9%. A grade still kind of going a bit better. New supply going on. What's going on?
Look, there's a lot of people wanting to hop into the market, but you've still got a disconnect between a lot of vendors and a lot of purchasers. There's only been 2 decent large-size office sales in the last 12 months. I think that's going to start to change. You're seeing some of the owners start to revalue their books. There's plenty of demand out of Singapore, strong local demand for offices, but it's just taking a reassessment of values.
Yeah, so it's just kind of people have been sitting on their hands waiting a little bit to see what's happening. We've certainly seen that in the East Coast as well, where we've seen like a couple of more transactions starting to filter through. Those revaluations are coming up, and no one really wanted to be the first to really show what that yield would look like. But how about on the leasing side of the market? How's occupancy going in these office markets?
It's good. And I think it's really important to say that, the mess that's happening in Sydney and Melbourne and Americas is not happening in Perth. The work from home factor is not that strong here. I can't recall what the exact occupancy, but it's up around the 85, 90% occupancy.
Yeah.
It's not really a strong factor.
Yeah.
But I do think the office market's been tainted with the Sydney and Melbourne.
And just a broader internationally, like you said, like it's a tough market in a lot of places in the world.
It's an unloved asset by a lot of people at the moment.
Well, which is quite funny because, office has always been kind of that trophy asset.
Yeah.
And you did mention that kind of offshore money. Are we going to see, is there some speculation maybe to go into the office market?
It's already happening.
Yeah, already happening?
Yeah. I mean, one of the transactions that Brett was referring to was purchased by a Japanese company. And we hadn't seen sort of much Japanese interest up and down the terrace for some time. And obviously Brett's over in Singapore very regularly, and there's always strong interest for Perth. It's just really for us, it's just a case of actually having enough assets off the scale that's actually going to interest them. Because most of them really can't be bothered at much less than 60 or 70 million or something like that, and we just don't have a huge amount of that stock over here.
Yeah, well, that's right. So the offshore money that's coming here, even that kind of the REITs and those sort of kind of big funds, they're looking at a whole different kind of price point, if you will, compared to...
But you've got a lot of Singapore private still, though.
Yeah.
I mean, certainly the Singapore inquiry into Perth in 2024 is stronger than it's been since the start of COVID. There's always been strong Singapore interest into Perth, but obviously COVID totally stopped that for a number of years. Singapore market's as hot as you can get, but there is a lot, at the private end as well, there's a lot of interest back into Perth.
And is the interest coming here because it's that safe haven status, or is it things look like good value, given kind of change in yields that have happened?
I think it's more the later. I think it's opportunistic.
Yeah, okay.
Look, there's always some market here that, so some money that will flow in just because it's a safe haven and, especially out of sort of some other countries that we won't go into.
Yeah.
But a lot of it's just opportunistic. It's seen as a good time to buy.
Yeah. And good time to buy. Also, we're seeing on that kind of smaller end of town, probably a lot of interstate buyers speculating and coming over here to WA.
Yes.
That's something that you've seen quite a lot of, Steve, across the different asset classes.
Quite a lot, and across all asset classes. And especially that sort of mum and dad investor money that sort of people that mum and dad's basically buying in the $1.5 to $3 million range. The buyers agents are really, really active over here. They're probably all on the phone to all of us weekly, wanting to get across what we've got. Brett was, it's funny, Brett kept referring to Singapore, but I think we're also seeing some increased interest. Well, obviously, always Malaysia, always has been. So I guess when we say Singapore, we probably forget to mention that actually that includes Malaysia as well. And we're seeing increased interest out of Indonesia, as well as some increased activity from Hong Kong buyers as well.
And are they all, like, historically, a lot of these buyers have really liked the hotel market. We talked about office, but are they also looking at a whole raft of different investment types, or are they looking at is hotel still a thing? How about retail? Like, your population is growing. There's not a whole lot of new retail being built, so kind of the need for retail is actually growing. Are they looking at those kind of centres, or maybe those
strong retail demand? I mean, the two properties that I sold on Murray Street Mall earlier this year for $80-odd million, whilst they were bought locally, a number of the underbidders were out of Singapore and Indonesia.
Mm-hmm. Yeah, okay.
They're looking at industrial investments. They're right across the spectrum.
Yeah.
And we were speaking earlier about retail centres, and some of those kind of maybe those neighbourhood centres are looking attractive to both offshore, but also it's probably a price point for that kind of private investor money. Maybe not necessarily mum and dads, but maybe kind of family offices or local syndicates or people coming from interstate.
Correct.
We're seeing a lot of activity, or not a lot of demand, not necessarily activity, because inquiry in that sort of retail space as well.
Yeah, and there's a few centres that have traded off market. The yields on those centres are still relatively tight, because they're seen as a safe haven asset with the. Especially if they're centred around non-discretionary spend.
Supermarket anchor.
Yeah. Supermarket, hairdressers.
Don't forget the liquor stores.
Yeah, liquor stores.
The liquor stores, 100% liquor stores. So if it's centred around that non-discretionary spend, then we're still seeing yields in the sixes, and on the odd occasion even a touch below.
So you kind of mentioned those sort of yields, but looking at it in a national perspective, those yields still look pretty attractive compared to other places. So is that kind of fueling a lot of that interstate interest?
Absolutely.
Into WA?
Absolutely. I mean, I could sit here and pontificate all day where the yields in Perth should be stronger than the East Coast for all the factors you talked about before with the economy, the population growth, etc. But the reality is they're not. The reality is a generalisation. The yields were 100 points softer than the East Coast. And that's driving a lot of that private demand.
And unlike previous kind of cycles, WA's always had a bit of a, boom and bust kind of stigma around it. So it, some of these investors, that extra, basis points really factors in that kind of risk profile. Kind of the fundamentals have changed a little bit for WA. Your population, like I said, growing. It's not just a mining town. Like, you do have other industries here. You've seen student numbers here are bigger than they have been before. So we've got a lot more people coming here from those areas as well. So it's a little bit different. So I hear your point in terms of where those yields maybe should be and why it does seem like such good value for those coming to invest in WA.
The only excuse that I can accept for a differential in yields from some of the investors is it's just the cost of them hopping on a plane every now and then
to come and check
on their asset. But it's a nice place to visit.
Yeah. Well, it certainly is. And I can see that even with tourism. We talked about hotel just briefly, but tourism was never really a massive thing for WA either. But, the state government's really put behind, trying to grow that tourism piece. You've got a lot of beautiful hotels now here in the city that you definitely didn't have before. So
Correct.
That's all generating investment activity, but also just, the number of people that are here, that they're spending money, all that kind of flows through to retail. I want to talk a little bit about kind of new supply. So we know the industrial market, super tight, just like everywhere around the country. Your population growth continues to grow, so your need for commercial space, no matter what it is, continues to grow. But we're not seeing that construction. Similar reasons to a lot of places, but what's your kind of construction costs, as we know, are quite high. Planning is quite difficult. Do you have any thoughts on where we're going to see that whole kind of construction cost piece or construction or planning? Where it's a hard one, but Where are we going to go with that?
Yeah, I don't know the planning's the issue that it used to be. I mean, there's certainly been some big improvements in the planning with local government just totally bypassed now. So you just go straight through to a DAP or a State Development Assessment Unit. So planning's not the big issue now. It is really just construction costs and then the lack of tier one builders.
Yeah, or the labour. The labour piece is just huge, isn't it?
Yeah.
Construction costs seem to have stabilised, but there's still a major issue with just builders failing, and therefore, if you want to develop a property, whatever type of property it is, who do you actually go and talk to?
You actually get to do it. Yeah, that's right. And it's a bit of a chicken and egg issue as well. So, we need workers, we need population to build the buildings. But unfortunately, in a lot of areas, apartment high density developments are just simply not feasible. So it's only really in high net worth demographic areas that high density development's even feasible. So we've got ourselves in a situation we need the workers to build the buildings, don't have the buildings to actually put them in. So we've got, as it stands, we've got 1,500 to 2,000 people a week. Moving into WA, and
where are they going to live?
We don't have enough room for them as it is. So, to answer your question, look, I don't know when that supply is going to free up. We can see across the road here at Elizabeth Quay. You can sort of see there's, it's obvious where the office supply is coming from.
Yeah,
it's probably.
That's probably not what we super need though, but they're there was obviously a pipeline of office supply that was kind of going through. So those last kind of few projects are finishing up now, and so hopefully that will kind of put the brakes on office supply just to keep vacancies kind of at bay a little bit.
That's right.
Well, I think like every other cycle I've been through with the offices, there's a flight to quality.
Yeah.
So it's just, the premium and the A grade office buildings will be okay, and it's the C grade, D grade, B grade buildings, well, they've got issues.
So is there? So we're talking about the construction piece. I'm kind of going off on tangents a little bit here, but that's our best conversations. So I usually like that. But we've got a number of people coming here. It's hard to build anything because we don't have the people here, but you need the people here. The construction costs are high, making development side activity, tough because nothing can, it's difficult to get projects to stack up. And we've seen residential prices in WA outgrow any other city in the country. Your housing growth has been off the charts. And also, given those fundamentals, one would suggest that is it really going to stop? Given that those indicators that you just said, number of people that are coming in, not a whole lot of new supply, cost of new supply is high, setting a new benchmark, if you like, of what a economic rent or an economic cost would be to build something. Rents, the rents, they're in line with Brisbane at the moment in terms of what the rents are. So we're seeing investors coming here and speculating also in the residential part of the market, as well as commercial. And some of the resi stuff kind of interesting is blocks of units. And that's something that we've definitely seen a massive trend over, say, 5 years in the East Coast. Usually it's the, families that have held it for a really long time, a generational asset, kind of walk up apartment buildings that have really had really great returns. However, the discounting that there was in the past, if you sold in one line, has really disappeared because everyone wants to jump on this whole, great returns, solid returns, low vacancies. Are we seeing some of that happening? I know different sort of property types and stuff, but in WA, is there a little bit of that activity going on?
I think we've sold between Steve and I think we sold 5 blocks of flats in the financial year just finished. 5 or 6. Strong demand. And in some cases, actually a small premium to what the individual units will add
crazy.
Up to. But there's always a small premium. Some vendors, think that it deserves a large premium, but that's just not happening. Yeah. But certainly some really strong demand.
100%. I mean, you put one of these blocks up and typically you'll get 100 odd inquiries.
Wow.
I would actually say that we've probably seen that soften slightly, but the demand's still there. And as you sort of mentioned, the discount rates that are being applied have disappeared. It used to be you'd look at the block of units and you'd apply a 20% discount rate, and then we saw that drop down to 15%, drop down to 10%. Then I think probably 12 months ago we're telling people to apply a 5% discount rate. Now it's forget about the discount rate.
Wow.
There'll be nothing there to discount.
Is that just because the fundamentals of the asset class being the underlying potential growth, as well as the growth in capital value, but also the growth in rent.
Yes.
Is offsetting that?
Correct.
Or is it that they have there's this huge amount of exit opportunities for these assets? Like, even if you just went in there and carved it up and strata subdivided it and then on-sold it, there was going to be...
That's what a lot are doing. It's, and a lot of some of these units are in high density areas. So, and they're actually underdeveloped. So you'll sort of see somebody buy it and, then run a feasibility, which includes making use of excess land. So, what's the value of the units? We've actually got, we've maybe got, 10 unit, free density here. What's that worth? And they'll actually, calculate values based on that. But even like, in the information memorandums that we put together, there'll be 2 financial summaries. There'll be one based on the current rental and then one based on the projected rental.
Yeah.
And then some of those blocks that we've sold certainly the last year have been a little bit on the unloved side.
Yeah, so renovation
and so you got a lot of owners come in and go like, great, I want the growth, I want all the demographic, economic factors you discussed, but I'm going to paint it, I'm going to do it up, I'm going to put a new kitchen in. I may sell them off strata title. We've got clients that have done that. Or I'm just going to sit there and hold and take advantage of that increased rent I can do from putting a bit of love into them.
Yeah.
That's right.
Yeah. And we're seeing, because of if they're families, so that's the next question is like who is buying these things. But what we've certainly seen, particularly in the East Coast, is a lot of kind of those high net worth families buying it, then kind of future proofing their children's, accommodation needs one's for your son and one's for your daughter and one's for, auntie or everything. And you kind of, you rent it out today, but just know in the future there is an opportunity for housing for your entire family if it is needed.
I don't know that we've seen any of them want to buy it for their family.
No.
I don't think, I haven't come across that yet, but certainly the buyers are right across the spectrum. Okay. Eastern States buyers, Singapore buyers.
Wow, so even offshore, looking at this sort of
buyers.
stuff.
Yeah, obviously then you have some FIRB issues with some of them.
Yeah.
But we've certainly had strong inquiry out of Singapore for a few of those blocks and then just strong local inquiry.
Yeah.
And some of the buyers, well, actually not even some, like a fair portion of the buyers are business owners who need to import labour.
Oh, wow.
And they're struggling they're having the same issues that everyone else is. So I've got a few examples of that where, at least two sold. One was actually for a company that needed to bring in. Another one was for an engineering company who's servicing the Greenbushes mine in Bunbury. And
wow, so they just needed housing for their staff.
Yeah.
Well, they pay nightly rates. So if you do the math for them, they've got sort of at any given time 15 workers down there paying $160 a night.
Yeah.
To accommodate them.
Yeah.
And so if this one that sold was actually a block of units with a small motel attached to it.
Yes.
But you work it out, they're much better off owning it.
Yeah, and then they own it, and then if that project ends, they can offload it and probably make a bit of money on it as well.
Correct.
The underbidder on that Osmond Park block of flats we sold was a local manufacturer who wanted housing for a whole lot of staff that he's bringing in.
Wow. Yeah, that's interesting, isn't it?
Yeah.
Wow. Okay. And talking also on kind of still sticking with a residential kind of theme, student housing. Student housing hasn't been. You've got a handful of projects here, or a handful of buildings, and some coming out of the ground here in WA. Is there much activity happening on that front? I suppose there's not so many opportunities to purchase.
No, there's about to be.
Yeah.
I mean, there's really strong preliminary activity, I'd say. You've got one development happening down in Wellington and Pier. But with the new ECU campus being built right here in the city, there is 1, 2, 3 projects with full development approvals in place, just working through all the construction issues that go. That's obviously the major impediment still.
Does it stack up? Or is that the major impediment?
That's going to be the major impediment, but really strong interest in it as an asset class, both from the developers and the end investors.
Yeah. Well, we know that across Australia, the greatest owners are, from overseas rather than the domestic buyers. So, and it's certainly a growing part of WA. It's a particularly growing segment. We're seeing a lot more students choosing Perth as a place to come and study compared to some of the East Coast.
The one difference with the student accommodation previously is that there hasn't been as much in the CBD or the fringe CBD because we didn't have a central city university. I think I'm correct in saying we're the only capital city without that. But with ECU coming in now, Curtin have certainly got a business campus up the eastern end of the city. You are seeing more student accommodation in the city happening.
And can I circle back to we'll talk about office markets and those kind of B, C, D grade assets where it's quite difficult. A lot of people do think that it's really easy just to convert these assets into something else. I know that I appreciate that they're really not. But is there potential maybe for, I don't think it's even really redevelopment, it's really knocking over and starting again. Perhaps is there something that we can do with some of these lower grade office assets to turn them into something else, or do we have to knock them down and start again?
Yeah. Well, in many occasions, yes, you do. And it's just bringing them up to code with BCA requirements. And ultimately, if you're trying to shoehorn residential into an office floor plate, just as we all know, doesn't work. Low ceilings, unworkable floor plans. But we did recently sell an office building as next Bankwest head office, and that got sold for storage units.
Wow.
So that's one thing I was going to sort of piggyback on top of this conversation about immigration and residential and density. The demand that we're seeing for self-storage operators has
Been strong.
It's been strong. It's increased
100%. But then it's competing though with the already really strong industrial market, which vacancies are super tight in that market as well. But self-storage, because it aligns itself exactly with what you said. People are moving, they're relocating somewhere to put their belongings.
But I don't think the self-storage is competing with industrial so much here. A lot of the self-storage is in the city or very fringe CBD.
Yeah.
We sold the Pier Street site last year to National Storage. We've had the deal that's Steve and Michael Milne worked on just down the Adelaide Terrace. We've got a couple of other offers on the table right at the moment from storage operators. They're coming in on the back of the inner city residential development.
So that's quite a good news story then for those kind of lower grade office buildings, if they can be, that's something that they could be repurposed into, I suppose, if there is demand for storage. It's better to have them occupied than not.
Yeah.
Correct.
Yeah.
And there's been some strong, with not so much the D grade office buildings or something like that, but with some of the other unloved office buildings, one of the biggest purchasing types at the moment in the last year right across the spectrum have been owner-occupiers. Mm-hmm. So, in fact, we've got a number of office buildings that we've sold or under contract right at the moment, sort of under the 15 mil mark, to owner-occupiers. Mm. And you've just got companies that are saying, we're going to take advantage of these opportunities and buy my own building.
Yeah. Oh, we've certainly seen that industrial for quite some time now, just to shelter from those growing rents.
Yeah.
But so you're seeing it across the office market too. Well, now is the time. The price seems right. Time to jump in it and make that purchase.
Yeah.
Correct.
Okay, interesting. So we might just to start wrapping up, and let's have a little think, and I'll start with you, Brett, and then you can think about it a little bit, Steve, is what is the opportunity? So if you were, a buyer, take whatever price point you like, or give us a few. If you are looking to invest in WA, like we're seeing a whole lot of people coming and investing in, what is the sweet spot and what asset is that?
In fact, what we talked about earlier, I think the office market's a great asset class to purchase into now, as long as you purchase smart and well, because I think it's just, it's an underloved asset class at the moment. But I think I don't think offices are about to disappear. I don't think everybody's about to start working from home forever. Mm-hmm. I think that'll all start to wind itself up slowly. And I think, some of the acquisition opportunities out there for offices at the moment are fantastic.
And do you think they will regain that trophy status, particularly for these offshore groups?
Yeah, I think so. But obviously it might take a little time to work its way through. But I think some of the yields that are available now on CBD office buildings are just fantastic.
You said CBD. What about West Perth?
Yeah, no, West Perth very much. Yeah. Especially in West Perth, you've got some refurbishment opportunities. A-grade, you've got with Gina Reinhardt, you've got two major redevelopment and a new development happening in West Perth. I think the West Perth fundamentals are great.
Okay. Yeah. West Perth.
Yeah.
How about you, Steve?
Look, I think anything kind of cyclical. like if it was me, well, I'd be telling people to put their money as any dev site that's that you can get a half decent holding income from, because a lot of the dev sites that are in areas where it's just not feasible, if you can find that seller that's willing to meet the market, and you might find that the holding income on it may just wash its face.
So buy something today for development in the future. It doesn't stack up today perhaps as a development site, but if you've got some sort of holding income, it can wipe its face, as you said.
Yeah, that's right. It can wash its face, and so I can see a lot of opportunity in that area as well. There's a lot of yields I think that have blown out purely on a sentiment basis. And quite often that sentiment's unfounded. You can buy very good petrol stations with.
I was going to say we haven't spoken about.
No, we haven't.
Petrol stations. You feel you're feeling good about those?
Some of the yields that you can buy these things at now. I mean, you could buy something with a 15-year lease and decent covenant, and some of the yields on that are really quite attractive. And I think that's all sort of based around this sentiment in the marketplace that EV cars are going to take over, and it's just like, seriously.
Okay, so let's just make it clear: EVs make up less than 1% of the entire car population in the country, and WA being such a huge state as well would lend itself to being probably one of the markets that certainly has had the slowest uptake in terms of electric vehicles, and until the charging and stuff can really sort itself out. It's so far away. And like you said, if you had an asset that's got a 15 year or 10 year, you can just kind of.
No, I think what I talked about the last video with you. I mean, I love the service stations as an asset class, the good ones, as distinct from average.
We still need to have that quality tenant. You need to have that multinational.
And quality location.
Yes.
So that, in time when we're all flying around in hovercrafts or spaceships and we don't need cars with petrol, well, then you can go and redevelop that property into some other commercial
development. Because that's the thing, is that those assets have really good redevelopment opportunities too. They're usually, main street locations, on a corner often. There'll be some remediation that would need to be had, but there's so many future potential uses for a service station. So if you, take the income today and see where it takes you down the track. So still feeling pretty strong on the petrol station or the service stations. And like I said, the yields are looking quite attractive in that asset class. That's for sure.
Yeah.
And WA probably a little bit more so than the East Coast. So we'll see more of these private investors coming across from the East Coast to WA. I think that's enough for today. I really appreciate your time. I love talking about WA. I have a soft spot for the state and the markets here. So thank you so much to Steve and to Brett for joining us today. Great to talk about all things WA, all the different asset classes. We actually touched on heaps of different things, so that was really great. So thank you everyone for joining us, and we'll see you next month for another Between the Lines Live. As always, you can watch this back on YouTube, and you can also pick up the recording on Spotify on our podcast as well. Between the Lines Live is what you need to search, or Ray White Commercial, RWC. Thank you, and we'll see you all next time. Thank you.
Thank you.
Thanks, guys.
Thank you. Cheers.